Hello, everybody. Welcome to Webinar Wednesday. My name is Martijn Lofvers. I'm the Chief Trend Watcher of Supply Chain Media. I'm also the Editor-in-Chief of Supply Chain Movement, a quarterly magazine still in print and online. We have a huge LinkedIn group, I think over 50,000 members worldwide, and we have a bi-weekly newsletter, I think 25,000 readers bi-weekly. And I'm also the architect of the SCM IT subprime map. You might know it, and I will discuss it later. So in this next 60 minutes, in this live webinar, we're going to discuss corporate versus entrepreneurial S&OP, sales and operations planning. So there will be an interesting conversation I will be having with two experts on that field. So next to me, you see me on the left, and in the middle, I have Sandeep Walia, Chief Transformation Officer at Slimstock. He has a lot of experience coming from L'Oréal and LVMH, so he has a lot of experience in the corporate world, but now since a few years, I think already, working at Slimstock, talking about S&OP a lot with a lot of clients and prospects and how to do that, and giving all kind of presentations, and we'll talk about it later. And next to Sandeep, Kraaijeveld, Sales Director of Slimstock in the Netherlands, been working for a lot of years, over 10 years in Slimstock, and talking with a lot of decision making in wholesale and retail, especially in small and mid-sized companies, also larger ones. So we have two experts in S&OP and both on the corporate world and the entrepreneurial environment. All right. First, few practical things before we have a deep dive in S&OP. So this webinar will be recorded, or is being recorded right now. So this will be made available on YouTube within 48 hours. And you can also download the slides within 48 hours as PDF. So the audience is on mute. So there are several ways to interact with us. So you can chat. Most of the time in the chat is, is this being recorded? Yes, it is. So please use the Q&A bubble. There's one function down below. If you have a question to Sandeep or Jan, please use the Q&A functionality. If this question is in line of the discussion I will be having with the both of them, I will ask this question immediately. If not, I will reserve this question for the Q&A at the end. And the good news is, if we're running out of time, after 60 minutes, we will have an extra 30 minutes. So Sandeep, Jan, and I will sit down in a virtual lounge, so you can have a conversation as follow-up with us. All right. As of this point, we will put off our camera, so you can enlarge your screen and have a better view on the interesting slides we are going to use after this. So a quick introduction of Slimstock. So basically, this is the IT subprime map I've been creating since 2011. And I don't go through it all the way. Basically, you see all kind of vendors, ERP, WMS, TMS, and also S&OP. So I've been doing this since 2011. I have a lot of input from all these vendors. And yes, Slimstock is one of them. And now I know Slimstock already for 30 years. Then they called Infolog a long time ago. But they started out as a software vendor on inventory management and replenishment. So you have the statistical forecasting with your data from the last year, etc. And they've been very successful in that field. But moving on, and now they've also created a web-based application for S&OP. And basically, as you see here, they started out on forecasting, but now also in S&OP, even network design and production planning is part of their offering. And they have offices all around the world, so we spare you the number of employees, etc., and locations. So they have locations all over the world, in US, South America, Australia, you name it. So very successful. Anyway, so this is a slide I'm using quite a lot to see, okay, what are we talking about? And this is a slide explaining what are the topics CEOs of corporates, of large companies are talking about, Fortune 500, talking about in their analyst calls every month, And on the right-hand side, you see the topics mostly mentioned, and higher up, it's growing compared to last quarter. And as you see, CEOs are talking about agentic AI. They talk about AI. They talk about supply chain. Yes, since 2020, the start of COVID, they use the word supply chain quite often in their calls. Also, tariffs is there. in the red, and big topic for CEOs is uncertainty. Sandeep, do you recognize these topics and when you have your conversations?
Yes, Martijn, specifically around the geopolitical uncertainty, the effect of tariffs or the lack of clarity around tariffs, and also the uncertainty around AI and the value add, because everybody is talking about the benefits of incorporating AI into your supply chain planning and execution, but nobody has seen the concrete actual benefits of investing in this technology as of now. So pretty much on board with what is on the slide.
All right, and then my translation to all this, we are supply chain professionals, and we want to connect the dots. So basically, it's not like this individual topics we are interested in, although they are of interest, but we want to connect them. And you see different kind of eruptions, black swans. You see COVID since 2020, war in Ukraine, 2022. You see Gaza. And you see also Trump being elected, and of course I already predicted Trump being elected, although I dislike it. But I said it will happen, but it is still a black swan because I don't know if everybody predicted his impact in the world economy with all the tariffs and all the announcements since February this year. And you see, COVID has led to lockdowns, shortages, because people were staying at home, but also lockdowns in the sense of factories and all kind of things, and leading to bullwhips and in Germany, stagflation. That means stagnation in the economy and still relatively high inflation. Jan, if you look at this, what are your takes and what are the things you are discussing when you look at this?
No, one of the key things you see now is that a lot of, let's say, wholesalers specifically are stuck with a lot of inventory. Maybe not stuck, but they made a decision beginning of this year with all the tariff discussions, maybe to act on that and to buy more than they maybe have done before. And now you see the turnover is not increasing, so they're a little bit, let's say, the days of inventory is increasing, so that now CFOs are getting questions. They will ask questions about the height of the inventory. So I see that in a lot of companies that the inventory is maybe, let's say, too high, maybe not, but the number of days is getting too big now.
And it's interesting to see, because companies haven't learned that much because of COVID. We've seen, manufacturers of bikes, mattresses, heat pumps, solar panels. After COVID, they were all stuck with a lot of inventory because their clients putting orders in more than one supplier because of huge demand, and then demand collapsed, and then all these wholesalers are stuck with bikes, heat pumps, mattresses, etc. And now, because of Trump, they were preloading, getting their stuff to the US, etc. And now they are also stuck. So it's they haven't learned that much, haven't they, Jan?
I think, Martijn, if the ship in the Suez Canal will be stuck again, I think then we'll see that nobody learned from it.
Yes. All right. Let's talk about S&OP.
I don't hope so. Be clear, I don't hope so that it will happen. But I think then we see that there's nobody planning on real scenarios. It's just acting on the short term. But I think it's a link with the rest of the conversation we'll have.
Yeah. You're right. So S&OP, this is my observation. We had an S&OP Flavor Day last month, so 150 supply chain practitioners talking about S&OP, from mid-sized companies to the corporate multinationals, etc. And they still see that S&OP as a process is still cumbersome, etc. And most of the time, it's still like a poker game where everybody is not honest. And with a lot of companies, still using Excel, although they might have implemented some sort of S&OP software next to this. And what do you see, Jan?
I think that's the main problem with, let's say, when we talk about aligning stuff, creating from, let's say, we all know the phrase one set of numbers, Martijn. And if you run into a current company and you will find in your own environment, everybody's using Excel or maybe Power BI. Maybe this is the biggest challenge we're aiming for. if you want to put on technology first, it's all fine, and maybe you want to improve on your maturity. But I think the real struggle is that we are all working in this Excel spreadsheet, and we call it, let's say, APS or whatsoever. I think that everybody recognizes, and the same goes with the decisions made, the behavior we have in these meetings. I think there's also, everybody know that is maybe the real problem of getting S&OP up and running.
So what's your observation, Sandeep, when you talk to your clients and also from your L'Oréal and LVMH experience?
I think to implement S&OP that adds value to the business, people, process, culture, behavior, governance aspects are more important than technology. It might seem a little bit counterintuitive coming from a software vendor, but you can implement S&OP that can add value to the business if you focus on governance, process, behavior, and people without technology. But you cannot implement S&OP if you only have a solution, but you don't work holistically on the people process side of the equation. So I think most of the times the S&OP fails to deliver value, not because of the tools or advanced planning systems, but because of the governance, the behavior, and a lack of shared incentives.
Yeah, all right. So let's take a step back, and let's talk about, you mentioned maturity. This is a Gartner overview, and this is from a long time ago, I think 10 years old, whatever. But, I've taken particularly this one because Gartner has changed it from a 5-stage to a 4-stage maturity. So, level 5 is now level 4. But anyway, this explains you have stage 1, 2, 3, 4, 5. And this explains also, where you're at, and you can read it yourself. S&OE, System Operation Execution, we'll talk about it later. That is stage 2. That's, when on the operational level. And S&OP is stage 3, and then you move on to IBP and stage 5. Sandeep, when you talk about this, because, a lot of corporates are talking to Gartner, and they know this model. Let's see from Jan if the mid-sized companies are also talk about this model or something else. But Sandeep, what is your take when you look at this?
The new S&OP maturity model from Gartner has 4 stages. And what is important as a business is to understand what is our moonshot versus North Star. So if anywhere between stage 2 and stage 3, which is basically anticipating and collaborating, anywhere between stage 2 and 3 brings us the financial value add of implementing S&OP, then that is more than enough. There is no point in implementing level 4, which is orchestrating stage of maturity, if the incremental cost of reaching to level 4 versus the incremental benefit is not there, right? So before the corporate or let's say multinational organizations, they go on their S&OP journey, they do diagnose their current maturity levels with different maturity assessments, whether it is Gartner or Oliver White, and they fix their North Star. That our aim is to reach level 3 and not level 4, because that is more than enough for the benefits that we are expecting, right?
So orchestrating is here stage 5.
Yeah.
So that is now stage 4. Don't ask me why, but maybe stage 5 clings to too ambitious, and no company will ever reach that. Maybe it's I don't know. But IBP is to mention this. The difference between S&OP and IBP. Yeah. S&OP is talking in volumes, and IBP is talking in euros and dollars.
So if we look at S&OP, most of the time the discussion is around let's say service cost, inventory, whereas IBP is more enterprise wide, and you have the notion of portfolio management, financial planning, and enterprise strategy as a whole that is included with the service cost and inventory decisions.
So Jan, recently in the last month, we did a lot of interviews with mid-sized companies and their implementation of the S&OP process, and also the solutions they are being using. So basically, what was your reflection on those interviews?
Well, you see, Martijn, and I think if you look to companies where they struggle, is if you want to achieve a next level, just to aim for it doesn't mean you can buy any software, any tool in the world, but it doesn't directly put you higher up the curve if you implement it. So, and a lot of people are still struggling with processes, and we didn't mention, I don't want to break the mood here, but maybe coming from the master data point of view, a lot of people struggle if you have maybe a process up and running, or you want to do clever stuff. Then the first, let's say, where they struggle is getting the right data in. And if you want to move up to the stages, I think to make it very pragmatic, you see where companies are still immature, is that they cannot align on several stuff. And you want to maybe aim for a next level, or you want to say, well, we want to really put up an S&OP. I will show you, Martijn, 9 out of 10, we're just talking about demand and supply, connecting demand and supply on the short term. For a lot of people, is that already the max to reach?
Yeah, and getting back to the 4 steps, you have 1 month, and you have 4 weeks, and basically Oliver White said already 20, 30 years ago, week 1, it's about product review, week 2 is about demand review, week 3 is about supply review, and week 4, you financially consolidate it in a financial review, or how you call it. And then you get to the next month. Basically, that's it. And in the interviews we published in Supply Chain Movement and magazine, basically what we saw, these mid-sized companies are deciding, let's start with just, do demand review and supplier review, and the next thing, add this portfolio overview in the first step, etc. So even they break down the process to make it work and make sure that they get into this meeting cadence frequency.
Yep.
All right, but getting back, and maybe that's the whole thing, and it's to see, Jan, maybe you can explain this. What is the ultimate goal of S&OP?
I think everybody recognizing this, especially in this period of the year, is that if you have, let's say, a calendar year on making budgets, that, well, I think everybody has made it already, but it's the same struggle every year. So for next year, we'll come up with a new plan, with a new budget, with new initiatives. And for sure, the turnover will be higher than last year. There will be a better margin. There will be maybe new portfolios. There will be new, let's say, markets. To create the budget and to aim for a certain number of turnover, let's say we're going to aim for 200 million and we want to, let's say, grow to 250 million, that's fine. But where do you connect your daily operations with the strategic plan? 9 out of 10, I see, let's say, board meetings, owners with creating the right, let's say, elements in the budget, and then translate it to the, I would say, the SKUs, Martijn. When do you order which SKU? There is no wider, let's say, perspective than this. So you want to aim for a number for next year. And then in time, you have to come up with, all right, now it's the 1st of January. What are we going to do? And I would think that a lot of people, the order books are already filled with the first 3 months. So you should be noticing a lot the first gaps already. But to connect it, maybe it's not a silver bullet, but creating an S&OP format to have the right meeting structure, maybe it will improve your decision-making unit. I think it can help you very well with it. But I think that a lot of people who are listening or joining the webinar will let's say, agree with me that creating the budget and align it with daily operations is also a big struggle.
And maybe Sandeep, you have your take on S&OP in a nutshell. Maybe you can go through this and then explain it in the corporate environment.
I mean, S&OP is a lot older than me. It's been there since almost 40 years. It has not changed that much. The inputs and outputs of S&OP may be different from one industry to another, specifically if we are focusing on CPG, automotive, and pharma. But in general, it is pretty much the same process that has not evolved over the last 30, 40 years. The objectives of any S&OP in a corporate multinational company environment is cross-functional alignment between the commercial, supply chain, and the operations functions. It is based on the planning horizon and granularity. We need to understand what are the decisions that we need to take around operational, tactical, and strategic horizons. We don't talk about SKUs in S&OP. It is done at a certain level of granularity of your product and location hierarchy. It is not an information sharing forum. It is a decision-making forum. And it only thrives when there is proper executive sponsorship, governance, and focus in place, right? And mostly along with the data quality aspect of it and lack of alignment between different value streams. These are the four main reasons why S&OP fails or why S&OP succeeds. I'll quickly share on planning horizon and granularity. When, let's say, I'm leading the global S&OP for a CPG brand, the decisions that I take in the operational horizon or in the tactical horizon are completely different. The focus is completely different. In the operational horizon, my responsibility is to stabilize the link between demand and supply for my product catalog. Whereas in the tactical horizon, it is more to grow. So this is when, for example, we focus more on the new product introduction or launching new countries or launching new categories. Whereas in the stabilize phase, which can be, let's say for CPG, 0 to 3 months, is to make sure that the demand and supply balancing is delivering the value add expected by the business. Right. So it's always about understanding what is the focus of operational, tactical, and strategic planning horizons, and at what level of granularity I need to run my S&OP so that we can take proper decisions in the executive S&OP reviews.
Yeah. And this slide also explains the horizons and a different kind of planning. So AOP. Yeah. Annual operating planning is in there, and also that's the budgeting environment. Maybe you have some things to add here.
Yeah, if we take the top-down approach, the key aspect of planning cycle is always strategic planning, and again, depending on industry, it can be 1 to 5 years. And then strategic planning feeds AOP, and then there is a back and forth between your AOP and IBP or S&OP. And then there is back and forth between S&OP and S&OE. And as you would see on this slide, on one side you have the planning horizon, which is weeks, quarters, years. On the other side, you have the granularity. S&OE, I run it at the SKU allocation level. Whereas S&OP, IBP decisions can be taken at a certain level of product hierarchy or location hierarchy, right?
So Jan, if you're looking at this, and what is your view on the SME world with wholesalers and retails? Do it also have a similar, hierarchy of planning, or is it more combined?
To be honest, Martijn, I think I don't want to, let's say, to be rude on my friends in wholesale, but the most of people are more than happy if they know what's gonna what's the, let's say, the turnover for next weeks. So if they create a plan and they create, let's say, the horizon will be maybe 1 year ahead. So let's say for next year they have a plan and they never review it. I don't want it. I think one of the key elements for this webinar is just to make let's say, a little bit of the differences. I don't think that it's wrong, but you see that they act on the daily operation. So really execution. And if you really want to plan, I think that's a different kind of expertise. And if you want to have a good aggregation level, or you want to improve and you want to be more mature on planning, and you really want to go into S&OP, I think it starts with, let's say, people around you, gathering around you, and to improve on every step. And you really have to step out of the real detailed world, because you see that we are very good in optimizing within the lead time. And if we have discussions out of the lead time, so I think when we talk about horizons, for a lot of people, they will recognize it will be very hard to get, let's say, better understanding of the data or your forecast about, let's say, what's coming up. And we talk about demand planning. I think, Martijn, Sandeep, I think you agree with me, but it's not only on, let's say, entrepreneurial level. A lot of people are reacting on the short-term statistical forecast, and they don't do really demand planning on, let's say, on a senior level.
And if I look at it, when I look at wholesale companies, they are very successful, entrepreneurial. They see opportunities. They buy stuff from China and they sell it into Europe. So basically, that's very entrepreneurial. And quite a few wholesalers have been growing based on their feeling of the market and the opportunities, seeing opportunities. So that's where they have been growing. And also in retail, you see, like Action and Rituals, they're growing, in the last 5, 10, 20 years. And they have, different kind of approaches, entrepreneurial approaches, and they have been successful. And sometimes they are not, in their entrepreneurial enthusiasm, not so careful about how to grow. And if all things are going well, that's fine. But now you see economic times have changed, bullwhips have happened, and now they are confronted with all kind of other issues. So that is also what you see, and reflecting on that again. And maybe, Sandeep, you discussed the horizons, and this is also another view how to split sales and operation execution and sales and operation planning. Maybe, Sandeep, you can explain it in your world.
Yeah, definitely. So I think we discussed the planning horizon and granularity are two key components when you are setting up a global S&OP process. And planning horizon can be different from one industry to another. So if we look at CPG or retail, normally S&OE is 12 to 6 weeks. And then S&OP is somewhere from 4 to 24 months. Whereas if we go into discrete manufacturing, automotive, pharma, A&F, these horizons can be a little bit different, right? And it has it is primarily because of the way those businesses are set up. So when you look at let's say the product life cycle in automotive and pharma, it is very long, engineering driven. It is regulated. So you don't launch a new car every single month, just like some CPG companies can launch a new flavor or a fragrance, depending on which category they operate in, right? Mm-hmm. But the good thing is that if we know that my S&OP starts from now and goes till 24 months, then in every iterative cycle, there can be a back and forth, there can be an information loop between S&OE and S&OP. So if we know from now till next 6 months what we are planning, in reality, what is happening on the ground, we can adjust our planning, and at the same time, we can respond to our execution needs if we have clarity around planning. And that's what you see here, basically. So my S&OE focus is maximum 3 months. If my supplier lead time in getting the new batch on the ground end to end is 3 months, right? Mm-hmm. If it is 2 months, then S&OE focus is 2 months. If it is 4, then it is 4 months, right? So my S&OP starts from now to whatever my planning horizon is, and S&OE is the relation between my customer lead time for my outbound needs and my supplier lead time for my inbound needs.
Yeah. That's good to understand. So basically, it's overlapping, but supplier lead times might also differ per product group or division or business unit. So that's also something to consider.
Yeah, that's why product hierarchy and location hierarchy becomes important. So, for example, in my previous companies, we had 40 production plants all over the world. Many of them they were in Europe. And we had suppliers that were intercontinental suppliers. So the lead time for production unit A can be completely different from production unit B.
Yeah, clear. And Jan, if you look at this, it is, a corporate view on horizons. But, if you look at wholesale and retail companies, do they also distinguish these different kind of horizons?
Yeah, I think to see, Martijn, if you look to S&OP, if you look to retail companies, they will buy, if it's not a private label, with a wholesaler. So the lead time will be very short. I think one of the key topics here, and maybe Sandeep, I'm over asking now, but I think the whole derail about the S&OP is also an interesting topic. Let's say before we started the webinar, I was talking about the new taxes for, let's say, for cars. We just changed it overnight for next year.
Yeah.
So I think the whole, let's say, mechanism about where we plan and all the things that are happening around is also a good topic to keep in mind. Can you tell me more about, maybe a little bit off topic, but in a structured way, in a very mature market, how do you cooperate with all these kind of things, maybe within the horizon, within the supply lead time horizon? Where do you want to put that?
Planning is one thing, and responding to real life is another, right?
Yeah.
So if you can cover for most of the scenarios, let's say 80% of the scenarios in your planning cycles, then you have capacity left over to respond to what real life throws at you, right? But if you are always running like a headless chicken firefighting, then even simple basic disruptions, they are difficult to manage. The fact that we can predict with or plan with a forecast accuracy of 80% gives us only 20% of disruption to manage. Whereas if the forecast accuracy is 50%, then 50% of our time will be firefighting and leaking value, basically. So in multinational organizations, S&OP is planning, but that planning goes into facilitating the execution. And if something happens in the market or on the ground or in the field, then we always respond to it and not just blindly react to it.
Yep. So, and look, pre-COVID, the markets were relatively stable all around the world, and you had stable growth. It was, it's very, boring, I would say, in the forecast, etc. And since COVID, all things have changed. We've seen, the bullwhips are happening. And early this year, a lot of companies were preloading to the US because, just ship as much possible inventory to the US before all the tariffs are happening. And so, you are pre-reacting to all kind of things. And, if things are changing, that could change overnight, what Trump is announcing. And even in the Netherlands, we have the similar things on taxes on cars, etc. That has a lot of implications. And you see now that companies are dealing with inventory. They talk about inventory strategically. And basically getting back to the previous slide, or this slide also, in the end, S&OP is about making decisions for the longer term horizon. Do we open up capacity? Do we are building up inventory? Do we are hiring people for certain reasons? Yeah. So that's also a thing we should realize.
And if I may add, Martijn, as I said, S&OP is all about making decisions that add value to business and financial performance. Pre-COVID, most of those decisions, they were around optimization, whether it is cost optimization, working capital optimization, efficiency. But post-COVID, it is more about resilience, right? And that's why supply chain resilience became a topic of discussion at board level in 2021, 2022. And how do we build resilience? We build resilience by a capacity to respond to what happens in reality in the markets. And most of the times, the capacity to respond is linked with your capacity to produce, your capacity to move goods, and your capacity to store goods, right? So I think S&OP is still pretty much same pre-COVID and post-COVID, but the output of S&OP from a process that is more focused on supply chain optimization to more on supply chain resilience is where the change has happened. And most of the big multinational corporations now, working capital reduction is not really the goal, as long as it makes their supply chains resilient to focus on their top line goals.
Yeah, and Sandeep, we had a discussion during an S&OP Flavor Day, our event in the Netherlands last month, about forecasting accuracy. And I know Jonathan Kaalse from Northbound Management did research. Pre-COVID, forecasting accuracy was about 80%. And during COVID, it dropped down to 30% on average. And maybe with some smart thinking and smart improvements, you get it to up to 60%. And now you want to improve your forecast accuracy from 60%, and maybe be realistic. Focus accuracy you can improve from 60 to 62%, and it's unimaginable to get it back to 80%. And there was a lot of discussion in a year. Is this really the case? Are these the real numbers? And of course, it depends on your horizon. But what do you see when you discuss forecast accuracy and the level and how to get back?
I think one of the pitfalls of S&OP is its over-reliance on demand planning and forecasting, right? Sometimes forecast accuracy is not the answer. Inventory is the answer, right? So again, in my previous experience, we used to clearly define where forecast accuracy is the leading indicator and where inventory or days of inventory on hand is leading indicator, right? So if the focus is blindly on improving forecast accuracy, we might miss the trick. But if we know where forecast accuracy or demand planning value add is important versus where there is so much of volatility, deviation, and forecast accuracy is not going to give us any tangible benefit, then we can play that with the level of inventory that we hold or level of capacity that we have to produce that inventory. So I think this is also what big multinationals do. They have the capacity to play on both sides, where forecast is a leading indicator and where inventory is the leading indicator.
So Jan, on stage, Rutger van Balen, who is the operation director of Trust, and they make keyboards and high-tech stuff and wholesale and manufacturing, outsourced manufacturing. And basically, he's applying S&OP. He talks that on stage at the event, but he also mentioned days of inventory on hand for the near future to manage your business. That's also something very important. And Trust is one of your customers of Slimstock, so that's maybe a good example that forecast accuracy is one thing, but days of inventory on hand in the next month is a more practical thing, especially for a wholesaler.
Yeah, I fully agree, Martijn. I think one of the reasons we were having this webinar, I think so. I want to thank Rutger for putting this topic on the agenda. I think they say it starts with a vision, right? And I think one of the key elements that Trust is able to do is that they make demand planning as, let's say, as a real value creating role. And if it starts with, say, connecting sales, creating the nice platform about getting a better forecast, whether it be 100% or 90% or whatever forecast you're aiming for sure, the inventory has to follow. And I think we all agree, if we want, there's this S&OP roulette, Martijn, and I think one of the key bets that I would put in is to create a very good supply chain. And what I mean with that is that if my supplier is always on time with the right stuff, for me it's always is even a better bet than creating the highest forecast accuracy available. And I know that I'm not making friends at the moment, but I'm just want to pin out that it's all connected. And I think one of the things we try to achieve with this S&OP stuff, that it's a long-term planning, acting together, right? We're getting to that later on in the webinar, but sometimes it's just creating a better result, and maybe on a specific KPI, let's say forecast accuracy, maybe you can lower it a little bit and have a better inventory, and it should be connected. It's always hard to explain, but I think those steps, all these things should be taken into account as well.
And maybe you can explain, because these are the basic steps you are following when you explain S&OP to mid-sized companies and wholesale and retail. Maybe you can go through briefly and explain the different steps and where you think the inventory is placed.
I think we both have let's say, Martijn, maybe we always say it, the product management review, I was seeing it at the S&OP Flavor Day as well. In almost every presentation, everybody skipped that step.
Yep.
It's a tough one, but I think still it should be worth to take into account, because if we are not, let's say, we are not able to create a good end-of-life plan, or we don't have any idea on promotions or on introductions whatsoever, we can start with demand review, but it's a basic step. It should be into the S&OP process. Demand review is the best way to keep everybody on the table, because you want to have sales on the table and you want to check on the forecast with the budget. Are we still in line? I think that's the most practical example.
Yeah, but step 2, yeah, you're right. A lot of the companies are bypassing it. Portfolio optimization. I had a discussion with one company earlier this week, and they said, yeah, we did portfolio optimization last year. I said, I beg your pardon, you have to do this at least every quarter, and preferably every month as part of the S&OP cycle. What's your take, Sandeep, in the corporate environment? Do companies taking into account portfolio optimization and rationalization every month in an S&OP cycle?
I think it depends on your catalog churn, how many new products you launch per month. So again, in my previous life, we had brands where you had launches every month. So of course, you need to do portfolio review every month. And then we had brands that were relatively slow. They did not have too much of product catalog or portfolio animation. And in that case, we were doing the portfolio review every 3 months. But what is very important, as a part of your demand review, you have to have clear visibility on what your baseline forecast is, what your promo forecast is, and also what your newness forecast is over the operational and tactical horizons, so that your launch performance is not impacted, right? So even if you do a product management review every 3 months, but it is very important in demand review to have clear visibility on the demand forecast for every product life cycle, whether it is newness, baseline, promo, or end of life. Yeah.
So I get some questions, in the chat. Please go on in the chat, and I will switch to chat and Q&A functionality to track it. And I will make sure that these questions will be answered in the hour or even after that in the after talk. Anyway, so Jan, you mentioned long-term planning, S&OPs done together, and these are the functions involved, and you see in the middle technology, process, and people. And Sandeep, you make it more extensive because you're in a corporate environment, and slides should have more characters and words. This also explains the different functions involved. So what is the main difference, Sandeep, if you look at this and the different kind of entities and functions involved? What are the goals of each of them?
Martijn, I think one of the key prerequisites of a successful S&OP is the RACI, the clear definition of roles and responsibilities. And the goal of any S&OP is to basically balance the demand and supply. And different functions, they play different roles in that equation. So if we are talking about the sales and marketing teams, their goal is to increase revenue, profit margins, market share through product availability and customer experience, right? And they bring to the table their understanding of unconstrained demand on which their sales, marketing, and merchandising plans are built. Whereas the job or role of supply chain planning is to bring the constrained bottom-up forecast. Also, if we are talking of product life cycle, the job of supply chain planning is mostly to focus on baseline forecast, statistical forecast that can be enriched by planner inputs. Whereas the sales and marketing, they focus more on the promo planning and the newness. Of course, demand planning supports on the newness forecasting, but sales and marketing, they drive the newness forecasting because of all the qualitative inputs that they have, right? So it's very important. And of course, then finance, they are responsible for the profitability and shareholder value. So if we have a clear RACI around which part of the demand review, supply review, pre-S&OP, executive S&OP review, which part of the process is led by which function, then it makes the S&OP a smooth process as a whole. But if this ratio is not clear, then cross-functional collaboration suffers, and then silos, they appear within the S&OP process.
Clear, you know. And by the way, Jan and I had a webinar early this year talking about the colors of S&OP. So, you know, we have used the Myers-Briggs colorization of business functions and applied it to the different steps along S&OP. And we had a nice discussion at our S&OP Flavor Day. I won't go into that because that takes a lot of time. But basically, you know, marketing is very yellow, intuitive. Sales is very red. Supply chain is very green, being realistic. And finance, finally, is very blue. And of course, every person has different kind of colors in them. So, but basically, this is what I see. Well, along the way, you see different kind of steps, different kind of ownership, and different kind of colors of kind of conversations. And I think, you know, I think one of the keynote speakers had this colorization applied to their S&OP steps along the way. And it was quite interesting to hear that someone already applied what we discussed earlier this year in another webinar with Jan and I. So this is one thing, but overall, and that may be good to the next step. I see a lot of questions coming in, but Jan, yeah, sponsorship is key. And this is a slide from Sandeep, but what is your take on sponsorship? Who should be involved in a mid-sized company?
I think it all starts with, you know, one of my favorite words I know is coming up, Martijn, governance. So you have to have the back of, let's say, top management. If nobody from the owner, or it depends also, and maybe one of the topics to add is depends on the treasurer, but still how to operate, but still it should start with the top. If the CEO, the president, the owner, if nobody is involved and really seeing the benefits of the S&OP process, don't waste your time. Because I see a lot of initiatives, people try to set up S&OP, or maybe call it different there. I saw some examples on the Gartner event in London last month. If you just mention it, you give it a different name or different, let's say, project name or whatsoever, or it's not a project, but a way of working, but you should have the backup of everybody in the top of the organization, because otherwise you will end up with a lot of meetings and they will end up in the, let's say, the suicide quadrant. You will have a lot of discussions on SKU level, on the long term, and whether to act on it, yes or no. So therefore, it should start with top management. And I think, Sandeep, it should be the same in every company, right? It doesn't make any sense or doesn't make any difference if it's a big or a small company. If nobody's aligned from the top, it's hard to be successful.
Sandeep, maybe you know, because this is your slide, you know, but how do you know that you have executive sponsorship for your S&OP or IBP project? How do you know?
I think there are two key words, and they are very distinctive words: sponsorship and participation. If we only have executive sponsorship but no participation, S&OP will not fly and will eventually become another meeting, right? So sponsorship is important, and also participation in a disciplined, dedicated manner at whatever cadence it is, whether it is S&OP every month or every 3 months or every 2 weeks, right? So sponsorship and participation. And I can share with you my own real life example. It goes back to 2008, 2009, when we were implementing global S&OP in my previous organization. One of the prerequisites of S&OP is shared KPIs across your commercial, financial, and supply chain functions, right? So if you look at the forecast accuracy, it is not the KPI. Well, I'm talking maybe 20 years ago, it was not the KPI of your sales and marketing teams, right? It was always a KPI of supply chain teams. So when we were going on with the design of our S&OP, global S&OP, our CEO, global CEO, sent a memo to more than 55, 60 business units and their management teams that 25% of the annual bonus of the management team of a business unit will be related to forecast accuracy targets, right? Then all of a sudden, everybody, whether you are a chief commercial officer, chief marketing officer, CFO, chief HR officer, chief operations officer, now everybody on the top level of the management in a business unit, your 25% of your annual bonus depends on forecast accuracy. So you have skin in the game to improve forecast accuracy. And this is where the silos break. The chief commercial officer will think now, okay, how can I improve in collaboration with my supply chain team and with marketing? How can I improve the forecast accuracy? And this is when the qualitative discussions, they start happening. And then you track the forecast accuracy and bias on a monthly level. You do your root cause analysis and you try to improve wherever, of course, you can improve. But I would say that executive sponsorship is important, but participation is even more important. And sponsorship without participation will not deliver any results.
Yeah. So by the way, I did a webinar with Jonathan Northwine of Jonathan Kraaijeveld of Northwine Management. I think 1 month ago, it was about forecast value add, and he talked about biases and forecast accuracy. So I see some questions coming in about forecast and accuracy related to this. Please watch the video of the YouTube recording of this webinar about this topic. We discussed only forecast value add and forecast accuracy and biases the whole hour with Jonathan Kraaijeveld. So please watch that because we can go into it, but all these questions are being answered in that webinar. Getting back to the sponsorship, last year there was an S&OP VP from Friesland Campina on stage. And he mentioned that the CEO of Friesland Campina, the dairy food multinational, was asking for the S&OP or IBP figures every month. So basically, he was asking these figures and basically make sure that he was aware of this process, but also what are the outcomes, what are the decisions being made, etc., etc. So he didn't have his sideshow own his figures, but he asked for these figures. So that was also skin in the game from his side to make sure that this process is running smoothly and the outcome and the decisions being made are shared and supported on the top level. Maybe, we're getting to the end. We have still, 8 minutes on this webinar. But Sandeep, what is the end game? What is the value add of S&OP? Why should you do this?
I think when we talk about benefits of S&OP, we always think in terms of KPIs. They can be demand planning KPIs, as we were talking about forecast accuracy, bias, and value add, or they can be working capital KPIs or service and fulfillment KPIs. But in the end, if I had to name one KPI where S&OP adds value, it is return on capital employed, and this is what you see here on this slide. So you have basically the supply chain, the standard traditional supply chain triangle, and every supply chain manager in the world is trying to manage or balance these three components or these three sides of the triangle, which is service, working capital, and cost. Service always translates into availability, that translates into revenue, generally speaking. And your revenue minus your COGS is your EBIT. And then, of course, EBIT divided by your working capital, where inventory sits, is your return on capital employed. So to keep it simple, if you can show with all the KPIs that we listed, whether it is demand, service, fulfillment, working capital, if you can show that your S&OP is positively adding value to your return on capital employed, you get the buy-in of all your leadership, whether it is on the commercial side or general management side.
Clear. And I think, how to sell S&OP or a tool for that matter is, if you can tell to your CFO, I can free up 10 million working capital in the next year, it could be 100 million, depending on the size of the company, but I can free up working capital in the next 6 to 10, 12 months, whatever, they will listen. Jan, what is your way of how to express what the uses of S&OP in mid-sized companies?
I think you touching the good points, Martijn, and also Sandeep. It's just to let people see what the benefits are on the long term, because we all know, I think, if you want to aim for maybe end of year inventory value, that's not a typical, maybe it's S&OP topic, but if you want to have an initiative around it, or you want to create a nice way of, let's say, maybe not a nice way, but a structured way of getting better decisions, I think it helps perfectly. But for a lot of people, and especially in daily operations, it's hard to see where S&OP is reeling the added value, because we are all, let's say, very good in acting on the short term. So I know what my availability will be. I know the days of inventory, that's all fine. But to create a real, let's say, S&OP rhythm with a good, let's say, good hierarchies with let's say the right people on the table to really get that up and running, to see the real benefits. I think we all are looking for that, but sometimes it's hard to measure, let's say, on the short term. Because if you want to improve better decisions, what's the benefit for now? If you are maybe the third or the fourth or the fifth month, maybe then you will see the real benefits on the long term. But I will assure you that a lot of people also listening today, they will say, well, that's fine, but my KPI is maybe for the short term. I just want to have 10% out of the working capital, and maybe S&OP is not the answer for that. So that's also, let's say, to push it back a little bit. It's not, like I said before, it's not a silver bullet for everything.
No, yeah, right. So we're getting the final 5 minutes of this webinar. So maybe briefly, Sandeep, this is your S&OP transformation track. Maybe you can briefly explain how far companies are at the moment, and what's your vision on that?
Yeah, I think it is more a crawl, walk, run kind of approach when you are going into an S&OP transformation. It happens in steps. It does not happen overnight. And if you follow standard transformation cycle, which most of the big MNCs do, you basically start with the diagnosis of your as-is state. Then you define your future state, then you pilot, then you scale, right? So this graph basically shows the transformation journey of an organization when they want to implement S&OP. And this is what I was saying in the beginning on the Gartner maturity model. If reaching the third stage, which is having a capable and integrated S&OP, gives you the value that you want, then it is better to have this as your moonshot. There is no point in wasting time and effort on going to the advanced or fully integrated S&OP levels of maturity. One of our colleagues internally always says that S&OP is not a beauty contest. You just have to be practical. You just have to make sure that what you are trying to achieve contributes to your business, contributes to the productivity of your teams and the quality of decisions you make. If it is at level 3, that's more than enough. Don't waste your time in going to level 4 and 5. And I think this is where the big difference is. Most of the small and medium enterprises, they are more practical and pragmatic, and they can bite-size S&OP into processes that can add value. Whereas when you are a multinational corporation, you have to do the whole thing, and then they go into this diagnosis, design, pilot, scale kind of transformative approach.
So when I look at this slide, I see phase B, lean, automated, touchless supply chain planning, etc. That kind of stuff that's in that area. But hardly any companies are there. They are piloting in that area to automate things.
If you look at the top 25 Gartner supply chain, maybe they are depending again on the sector, but I'm more focusing on CPG, automotive, and pharma and industrials. But apart from that, I think maximum level of maturity is advanced S&OP.
Yeah, and even those companies are just piloting this phase B, and they have a hard time to keep a momentum every month on the IBP cycle, etc., to get it running. Okay, we're running out of time, so basically, Jan, I worked through your slides, but basically that's
I think we
the
covered
same-
this already, Martijn, so I think
Yeah.
you can skip this. this
Yeah,
bit.
so basically this is the whole thing to get this plan. So my wrap up slide, still forecast and accuracy remains low in a lot of companies, and it's overvalued. That's what I see a lot. And basically, you see a lot of conflicting KPIs still, because you see the different departments responsible for product, demand, supply, and finance. They have their own KPIs, and they expect the things to go up and down. Basically, that's the reason why you see this kind of conflicted KPIs, and a lot of poker gaming still in the meetings. Basically, this is what I see. You need to segment on your supply chain and your products, and one supply chain doesn't fit all. Be aware of that. So you have to segment. There's also a question: how does it relate to make to order and make to stock? We also see S&OP applied and IBP in a make to order environment. If you have an order book, you talk about probabilities, etc. Is this going to fall or not? And this kind of stuff, and you can take on account of that. We're running out of time. We are running out of time. There are also questions about ABC XYZ analysis. Will it help in your S&OP? Yes, but it's not enough. That's my quick answer on that question. So basically, like I said, right after this, we can talk for another hour, but this is scheduled for 1 hour, and we want to claim the agendas of all the participants right now. So after this, we have an extra 30 minutes. S&OP, is a topic at heart within Slimstock all around the world. So they have S&OP on-site meetings in a lot of countries around the world. They have courses. They have a book. So basically, here you see more stuff, what you can see and download, the IT supplement map, the readiness scorecards by Slimstock. There's a white paper, very interesting. They have books already updated. So there's a lot of stuff you can find online and about this. I see a lot of questions, and we were running out of time, and some questions are already answered, some are not. So the audience, thank you for your questions. Slimstock will get back to you on a one-on-one basis to answer these questions. So thank you for participating in this webinar. I hope to see you in the lounge right after this, within a minute, or I hope to see you someday face-to-face or another webinar. And of course, Sandeep, I want to thank you for your insights from the corporate environment. Thank you.
Thank you, everyone. Thank you, Martijn.
Yeah, and Jan, also, it's also nice to have you on the call in the webinar. Thank you for participating.
My pleasure, Martijn. My pleasure.
Yeah, so right after this, within a minute, we will be sitting down in at table 1 in the lounge. So be there or be square, so you can have a further conversation. If not, thank you for watching, even live or in the recording. And maybe I will see you next week. Next webinar, we will talk about leadership, and we'll talk about the top 28 supply chain executive Europe. So next to the Garden top 25, we have our own top 28, not on a company basis, but on a personal basis. We did a lot of analysis, and we did a large survey together with the recruitment agency Odgers, and we will talk about it in the next webinar next week on Wednesday. As of now, thanks for now, and see you later, hopefully next week, and bye-bye.